You always see videos about the best stocks to invest in, but what if you didn't want to invest in stocks? What other options do you have? So in today's video, I'm gonna go over the 5 best investments that are not stocks. I'm gonna briefly go over each of these investments one by one, but I'll also show you how you can start investing in all of these investments. Now, make sure you watch the video all the way through because there's probably gonna be some investments in here that you've never even heard of or considered, and some of these can give you considerably large returns, especially when compared to the stock market. All right, first up on the list are REITs, also known as real estate investment trusts. A REIT is essentially just a company or a fund that owns, operates, and finances income-producing real estate. Now, when you own shares of a REIT, you get to collect dividend payments similar to when you own dividend-paying stocks. The difference, though, with a REIT is that the dividend payments are actually coming from the income that's being produced from the underlying real estate that the REIT owns. So it would be very similar to you owning a physical property yourself and collecting rent payments on that property. The only difference, though, is that with a REIT, you get to take advantage of the benefits of owning physical real estate without actually having to go out and finance and manage physical real estate. You see, prior to the invention of REITs, the only really accessible way to own real estate was to go out and buy physical real estate. But of course, buying physical real estate requires time and money and energy and resources, a lot of which most people don't have. But with REITs, it's now possible to own real estate, to have real estate in your investment portfolio without actually having to ever step foot on a physical property. Now, I'm not going to get into the pros and cons of owning physical real estate versus a REIT, but just know that in general, adding REITs to your portfolio is by far one of the easiest ways to invest in real estate. So how do you start investing in REITs? Well, ironically enough, REITs are actually bought and sold on the stock market just like stocks. And so getting started investing in REITs is actually really easy if you have a brokerage account. So let me show you an example of how you would buy a REIT. So I've got Webull pulled up here, but what I'm about to do here will work with any brokerage, okay? So simply go to your order entry window and type in the symbol of the REIT. So a very popular way to invest in REITs is to actually just buy shares of Vanguard's real estate ETF, which is basically just an ETF that invests in several different REITs, all conveniently wrapped into a single ETF. Or if you really prefer to just buy single REITs, then here's a list of a few that I would recommend. So a few good options include the Power REIT or the Goodman Group, Safehold Inc., Equinox Inc., and then a really popular one, a very big one, is the American Tower Corporation. Now keep in mind, many of these REITs are actually in Vanguard's real estate ETF. And so it might just be easier to invest in Vanguard's ETF. You get a much more broad exposure over several different REITs, but you also get more broad exposure over the real estate market in general. Hey, really quick, if you're finding value in this video, do me a huge favor and drop a like on this video below. I would appreciate that so much. All right, next up on the list are bond ETFs. So what is that? Well, conveniently enough, the name describes what it is. And so a bond ETF is simply an ETF that invests in bonds. So an easy way to think of a bond is basically it's a loan that you give to an issuer, okay? And the issuer could be a corporation, it could be the federal government, it could be some local government. When you buy a bond, the issuer agrees to pay you back that bond in full with additional interest. So it's very similar to how a loan works at a bank. When you take out a loan, you get the money, but you have to pay that loan back with interest. And so a bond is really the same way, except it's flipped. Okay, so what about an ETF? What is that? So ETF stands for Exchange Traded Fund, and it's basically just a basket that holds hundreds, sometimes even thousands of different investments. This could be stocks or bonds or REITs or currencies, and nowadays even cryptocurrencies. An ETF bundles together investments and makes them easier to buy and sell while also adding diversification to your portfolio. For example, instead of going out and buying all 500 stocks that make up the S&P 500, you can just go and buy a single share of an S&P 500 ETF and you would get the same exact exposure exposure to that index that you would if you were to buy all 500 stocks. Now, what I'm proposing as a stock alternative is to only invest in bond ETFs, okay? Although ETFs still trade on the stock market, when you invest in a bond ETF, the underlying asset of that ETF is, well, bonds. So how do you start investing in bond ETFs? Well, it's super easy. The same way that you would buy REITs, like in the first example, is how you would buy a bond ETF. So you would start off by going to your brokerage account. So once at your brokerage account, navigate over to your order entry window. Then all you're gonna do is type in the symbol of the bond ETF you want to invest in. For example, I'm gonna type in BND, which is Vanguard's Total Bond Market ETF. Then I'm going to enter the amount of shares of this ETF I want to invest in. Choose my order type, which will likely just be a market, and then hit buy. I'd recommend heading over to etfdb.com, also known as the ETF database, and you'll find a list of the top performing bond ETFs, all organized and easy to understand. I'll leave a link to this exact page that I'm on right here in the description below. Now, if you don't have a brokerage account already, I just made a video actually pretty recently about the top 5 best investing apps for beginners. I'll leave a link to that above and in the description below. If you don't feel like watching that video, in short, I would recommend either Webull, which is what I use, or M1 Finance, and I'll leave links to both of those in the description below. All right, so moving on to number 3 on the list, which is art. And yes, I'm talking Picasso, Van Gogh, Da Vinci, Monet, Michelangelo, Warhol. But hey, I get it. You don't have a few $100 million that you're willing to invest in a piece of fine art. So why the heck am I even including this on the list? Well, fortunately for you, and really for all of us, there's a website called Masterworks that allows anyone to invest in fine art without having to spend millions. So the way it works is Masterworks purchases paintings that they believe are investment grade paintings. Now, basically all this really means is that they go out and they buy paintings from well-known artists who are known for having paintings that increase in value. Now, when Masterworks buys one of these paintings, they then file it with the SEC, which allows you to buy shares and have fractional interest in the painting. So put more simply, this basically just means that you can buy shares of a painting the same exact way you can buy shares of a stock. When you buy shares of a stock, you technically own part of that company. You become a shareholder, right? That's why it's called a share. When you buy a share of an old painting, you have fractional interest in that painting, which means that you are a part owner of that painting. It's pretty cool stuff. Now, this leaves us with 2 burning questions. The first is, can you actually get good returns by investing in art? And the second question is, how can you get started? So let's answer that first question. Can you get decent returns by investing in art? And the answer is yes, you can actually get pretty good returns by investing in art. In fact, according to a report done by Citi, contemporary art has an average annual appreciation of about 13.6%. And so yes, there's no question about it, investing in art can definitely give you some pretty great returns. So that brings us to our next question, which is how do you get started? Well, it's easy. You're first gonna head over to masterworks.io. What you're gonna do is click on that button that says request invitation, and then fill in your name, your email, phone, and password, and then just hit submit. Now, I do want to mention that at the moment, Masterworks is requiring a phone interview to begin investing with them. I know that sounds kind of weird, like it's very unheard of, but I think what they're trying to do is just make sure that the people who are investing on their platform are serious. They're serious about investing in art. But also keep in mind, there is no like minimum requirement in terms of capital. Anyone can start investing in art using Masterworks. There is no income requirement, there is no minimum deposit, nothing like that. So don't let this phone conversation intimidate you into not giving this a try, because it's totally worth it, because the returns are pretty solid. Okay, number 4 on the list is gold, and more specifically gold ETFs. Now, if you want to, you can go buy physical gold bars, be my guest. Just know that investing in gold ETFs are really equally as good as owning the real physical gold without all the hassles that come with owning real physical gold. Now, I think it's really important to point out that when you buy shares of a gold ETF, you aren't technically buying shares of physical gold. In other words, the ETF itself is not backed by physical gold. Instead, the ETF is backed by gold derivative contracts, and those contracts, those derivatives, are backed by real gold. Now, after saying all of that, just understand that gold ETFs are still a really good investment, especially if you're trying to avoid stocks. So how do you get started with buying gold ETFs? Well, the same way that you bought the REITs and the same way that you bought the bond ETFs is going to be how you buy the gold ETF. So go ahead and head over to your brokerage account, and then you're going to go to your order entry window. Then what you'll do is type in this symbol here, GLD. And what that's going to do is pull up one of the most popular gold ETFs, the Spider Gold Trust. Then you'll just enter in the amount of shares you want to buy, and then set your order type, and then submit. Now, keep in mind, there are a ton of other gold ETFs that you can invest in. I just mentioned the GLD because that's the most popular one. And finally, last on the list is peer-to-peer lending, also known as P2P lending. So peer-to-peer lending is an online system that allows individual investors like you and I to go and fund loans of individual borrowers. So let's just say, for example, that you wanted to take out a loan to, I don't know, buy a computer. Traditionally, the only way that you would really be able to do that would be through a bank, right? You would either go to the bank and get some type of personal loan, or you would just use your credit card, which would just be a bad idea because the interest rates on those are just horribly high. In any case, the point remains that the traditional way of getting a loan has always been through a bank. However, with the invention of peer-to-peer lending, it's now possible for borrowers to skip banks altogether and just go directly to their peers. So instead of getting a personal loan from a bank, you can now just go to a group of investors who are willing and able to fund your loan for you in return for some interest. So the same way you would go to one of these platforms to get a loan, you can also become a lender, somebody who invests in loans and gets paid for it. But like with any investment, there are risks involved. And the risk of peer-to-peer lending is that at any point, a borrower can default on their loan. That basically means that you're never seeing your money again. Fortunately, there are ways that you can mitigate that risk relatively easy. So platforms like Prosper basically allow you to buy essentially pieces of loans. If somebody wanted to take out a $2,000 loan, you wouldn't have to loan them the entire $2,000. Perhaps you would loan them just maybe $50 or $100 of that $2,000. And so now, by only funding a very small part of that loan, if the person did default on the loan, you wouldn't be out the entire $2,000 that they defaulted on. You would just be out the $100 or $50 that you invested into that loan. You know, and ideally, you would probably be investing in several different loans anyways. And so it's very similar to how you would mitigate your risk in the stock market. Like if you're investing in stocks, it's not a good idea to put all your eggs into one basket, right? Like you wouldn't want to put your entire portfolio into one single stock. Instead, it's better to sort of like spread out your eggs. And so if one stock begins to crash, it doesn't mean that your entire portfolio is going to crash, because your money is spread out among dozens or possibly hundreds of other stocks. Instead, you would spread out your investment over dozens of different loans. And so even if 2 or 3 of those loans default out of 20, well, that's just 2 or 3. You still have those other 17 or 18 loans that the person didn't default on, which you earned the full interest on. So how exactly do you get started? I would recommend going with one of these established peer-to-peer services. You know, services like Prosper, Upstart, or Perform, just to get started. So for example, let's say you wanted to start with Prosper. All you would do is just go to their website. What you want to do is click on the Invest tab and then Get Started. From there, you would just click on, Get Started. They require that you type in your zip code. And so you'll type that in and then hit Continue. And then from there, you'll land on the application page. You'll most likely choose a general investment account unless you really think that you're going to use your Roth IRA or some other type of retirement account for this. Now, I do want to mention that Prosper is not available in many areas. For example, when I typed in my zip code, it told me that Prosper was not available in my area. So just keep that in mind when you're signing up. All right. So there you have it, the 5 best investments that are not stocks. I hope that you've gotten enough information from this video that you can go out and start trying to invest in some of these stock alternatives. If you haven't already subscribed to my channel, please do so. I would love to have you back on these videos. You're amazing for sticking through to the end and watching the video all the way through. I mean it. Thank you so much, and I will see you again very soon. Take care.